February 13th, 2024. I mentioned yesterday that we might end up getting a plunge because of the daily chart. Probably only like 30% chance of it, but we obviously got it today. Most of it was overnight. As we got big move down, it was obviously a huge gap. And when you get a huge gap, for the most part, you're going to go sideways on the open. Something I like to keep in mind is that when you get a big gap, you're most likely going to get a second leg down. You can see today we essentially got a measured move down of the wedge. It was around the low of the day. And we ended up getting, when you get a big gap down, the most common outcomes are a double bottom, then a swing to the moving average, a wedge, then a swing to the moving average, and a wedge rally. Sorry, a bear, a wedge rally, and then a sell off, or a double top of the moving average and sell off. You can see today we got essentially a wedge down, and then we got a wedge to the moving average, and then a sell off and a measured move down. But when you get a big gap down, you're most likely going to get a second leg. And so when you get a big bar like one, you have to keep in mind that there's a really big tail on the top. And so a big tail on the bottom. So we're probably actually not going to go that much higher. I remember one of the things I used to do was whenever I would see something like this and then I'd get any sort of bull bar, I would just buy and hope we would get back to the moving average. And that's really not a good idea. You know that this gap is so big and it means that we're probably going to get a second leg down. Additionally, there's a big tail on the bottom of one, meaning that there was initially sellers here and bulls were willing to buy lower, but not necessarily at the high. So it's less likely that we're going to rally. And if we are going to rally, we'll get a lot of good bull bars closing near their highs. So I think it's okay to wait. Reversal down two, it's a low one short after the gap, but probably not very good. You're probably not going to get that much follow through for it. You do end up getting follow through on three, but is it really the follow through you want? If you sold below two, is three really what you're looking for? Not really. You probably wanted a bigger bar like 18. Three's not bad follow through. It's a bear bar closing near its low, but I think, if you took the sell here, you wanted a much bigger follow through bar. More follow through for the bears on four, but again, tail on the top, small tail on the bottom. It's really not as good as it could be. I think the bears, they have a micro channel and they have three straight bear closes, but there's probably going to be buyers below one. Why do I think there's going to be buyers below one? Because it's a bad sell. You're selling a breakout after the massive gap down, and you're well below the moving average, and this isn't all that great a bear price action. So I don't think bears are going to be selling breakout points. You can see you get a reversal up on bar five. It's a doji bar, and it's probably a minor reversal after these three bars. But so this is probably enough for a second leg down. But it is lower in the trading, the overall range. Six, a bear bar closing kind of near its low, but a tail. Bears did a good job preventing five from triggering. A lot of bears are going to exit above five if it triggered. So bears did a good job preventing it from triggering by selling the close and causing six. More follow through on seven. You can see we get below the breakout point, but again, this really isn't all that ideal. A bear bar on eight, but essentially an inside bar. And is this the bear trend you wanted to see? Not really. I think bears wanted to see much bigger, better bars. So bears are going to be pretty eager to get out of any bull bar with a decent close. And that's exactly what, first off, we got 9. So traders not willing to sell below 8. And then we got a reversal up 10. And you could argue it's 3 pushes down, 1 pullback, 2 pullback, and then the tail on 10 could act as the third push for the bears. Do you buy above 10? I thought it was probably going to be a minor reversal. I thought this channel was pretty tight and probably going to get a second leg. So I was kind of unsure about buying above 10, but I definitely don't think it's unreasonable. It's a potential swing. And you could argue 8-9 is a final flag. Follow through for the bulls on 11, but a tail on the top. It's okay to be long. It's just, we might get a pullback, but definitely okay to buy the close, buy above 10, buy the close 11. Big follow through 12. Now clearly always in long, but towards the top of the trading range. And additionally, the traders who bought above 1 did a reasonable thing. It wasn't great, but it was reasonable. And so there's probably going to be sellers at the 1 high when we get there because those traders scaled in and they're looking to get out of their initial price around break even and their second entry with a profit. So in 12, additionally, it's a really big bar. It's climactic. It's breaking out above essentially this channel line. So big climactic bar on 12. So we're probably going to get a pullback. And that's why we get disappointing follow through on 13. 13 acts as a pullback. So you could argue it's spike, pullback, and then we're going to get a channel. That's exactly what happened. Follow through for the bulls on 14, but not as good as it could be. Bad follow through 15, and then inside bar 16, kind of tough. Some traders might exit below or above, and then you get outside up 17, but again, hails really not all that good. And then a surprise 18. What causes 18? I think it's bulls giving up. I think bulls wanted 17 to close outside up, and it didn't. And when that happened, a lot of them just gave up and sold out at the market, figuring that we're probably at the top of the trading range. You can see we got a failed breakout of the high of the day on 15. Then we got another failed breakout on 17. So traders just dumped. Oops. But 18 ended up closing near its low. Some bears might be looking to sell. You know that bulls are going to exit below 18 if it triggers, and you can see that's why bulls bought the close of it, causing 19. If you buy 19, I don't know. I think that's kind of tough. You're buying really high in a tight trading range. You're buying near the moving average. Your 2 to 1 is all the way up here. So I don't really think it's a great buy. You can probably take it for a swing, but I don't think it's all that great. When you get follow through on 20, you have to imagine that since we're right near the moving average, 20 is not going to get great follow through. So you should probably be expecting disappointment on 21. You get 21, kind of difficult to stay long after 21. Some traders bought the close 20, disappointed 21, selling out around break even during 22. Another bar up, 23, and then disappointment 24. Essentially a double top, 23, 24, but really not all that excellent to be selling. There are probably buyers below. Like I said, I saw this as a spike here and then a pullback, and now we were forming the channel phase. So the thing is, with channels, you can easily test back to the bottom of the channel. That's exactly what we did when we started to form this trading range, was we tested back to the bottom of the channel. But, I don't know how much higher we're going to go. This channel was relatively tight, and it could keep going and get stronger, but while it's always in long, you have to just keep in mind, if you're long anywhere up here, you're probably just exiting below any bear bar. So 26, a good bull bar. It's trying to break out above, you could argue 1, pullback, 2, pullback, 3. So it's a third push, and bulls want the bull breakout. But again, if you're buying up here, you're buying high in a channel, that's probably going to end up being a trading range, and you're buying on the channel line. So it's really not all that great to buy above 26. You have to imagine the follow through you're going to get. If you buy above 26 is going to be something disappointing. And that's exactly what happened on 27. You got disappointing follow through. 28, bears or bulls bought above 26, disappointed 27, getting out break even during 28. And they'll exit below 28. Some might exit below 28. I'm not sure you totally have to. It's an inside bar and probably a final flag. But if you don't exit below 28, you're exiting as 29 is going down. 29, a strong bear bar closing near its low. The bulls have had a relatively tight channel, so this first reversal down is probably minor, and we're going to get some sort of bounce. But I thought that it was interesting that 30 ended up being a bear close as well. I thought that a lot of times 29 is just going to get disappointing follow through, some sort of bull bar, and bears will probably look to exit and sell higher. But instead, we got follow through on bar 30. More follow through for the bears, bar 31, but doji, essentially a doji, so really not all that good with all these tails. And then essentially a breakout below the channel 32. So spike and then channel 30, 31, breakout below the channel 32, but you're right at the bottom of an overall trading range. So it's really not all that good. Bears who sold the close of 18, probably going to be looking to get out around break even. You can see that's exactly what happened. And, this is essentially the start of the channel, right? Because I said spike, pullback, channel, and this is the low piece of the channel. So it's reasonable to think we're going to test that, which is exactly what happened. 33, a bull bar closing near its high. I think a lot of bears will exit, but I'm not so sure bulls are going to buy. This was pretty tight down. We might get a second leg up from this, but I think we might have to pull back more after the strength of this. Disappointing doji on 34, and then a bear bar closing near its low 35. If you sold here, hoping for an always in trade, and you got disappointed with this, you can sell again below 35. The bulls who bought above 33 are disappointed in 34, and they're exiting around break even during 35. Follow through for the bears 36, but you're kind of headed towards the bottom of the channel line at this point. I'm not sure it's all that great to be short. And additionally, the breakout below the 18 low ends up failing, right? So it's not as good as you want it to be. You can see traders buying back shorts, and that causes 37. And it breaks above the neckline. So 33, 36, essentially double top, neckline 34. And we break above it on 37. But 37 is a huge bar right at the moving average, so probably not all that great to buy. And you get disappointing follow through 38, and then a doji 39. Anyone who bought above 37 was hoping that 38, they wanted a huge bar. They wanted a bar that looked like 12 and to get swept into, a massive win essentially. And that's probably not going to happen when you get bad follow through 38. And then a doji bar 39. Bulls start to give up. You can see the bulls who bought up here disappointed in this are selling out, and that's what's causing 40. And 40, a good bear bar closing near its low. You essentially have a couple legs down here, and the bears are hoping we get a breakout below and a measure move down, and that's exactly what ended up happening. But you get a good bear bar 40. I think it's a reasonable swing short. Good follow through on 41 for the bears. Sell below 41. You get 40 or 41. You get follow through 42, 43, but not really ideal. A bull bar 44, and then a bull bar closing near its high on 45. I think bears probably get out above 45. I think it's kind of hard to stay short. This will probably get a second leg, but the pullback could be a lot deeper than you want it to be. Disappointing follow through 46, and some follow through for the bears 47. 47 ends up being a double bottom with 45, and we're in a tight trading range at this point. The bulls are trying to get some sort of credible bull bar and a reversal up, but what ends up happening is you get another bear bar closing near its low 49. And if you're an always in bear, you can see we got a breakout and you're hoping for the second leg. And why did you get out above 45? Because you were concerned that bulls were going to get a couple legs sideways up and maybe come back and test this 39 low. Instead, what ended up happening was I also want to see, initially on 40, bears were more interested in trying to sell the 50% pullback than the actual below the bar. But anyways, bulls wanted to, you exited here because you were afraid we were going to get a bounce, and we end up not getting it. And then you get another bear bar closing near its low 49. So bears can sell again 49. Disappointing follow through 50. We'll probably exit above 50, but it never triggers. And you get 51. Big bear bar closing near its low. Follow through 52. Bear bar closing near its low. Follow through 53. Again, another bear bar, but not all that great yet. These are they're good bars for the bears, but big tail, smaller bar, shrinking bodies. So you're kind of unsure as to what you're going to get at the low of the day. And then you get a bull bar 54, and most of the bears will probably exit above 54 for triggers, but you can see they all just sold the close of it, and we got a dump on 55. And we went right through the support of the day's low. So you have those trap traders. You get follow through 56, lots of trap traders, more follow through 57. This is super parabolic, though. Keep that in mind. We went here, and then we just basically went straight down. So again, more reasons for traders to be looking for some measured move, maybe like that. Follow through 58, 56, 57, and disappointment 58, a low one short 59, but low ones generally lead to deeper pullbacks and then retests. You can see on 60, double bottom. If I was short for any reason, I think getting out above 60 is fine. It's a second entry. It's probably not going to be all that good, but it's okay to get out. And that's what happened on 61. Followed through on 62, but not really all that great. And then a bear bar closing near its low on 63. If you're an always in trader, this has been a strong bear trend. You trade with the trend and you get back in below 63, I think. Follow through 64, 65, good for the bears. And it's a spike, so we'll probably end up getting a channel. Disappointment 66, traded above. Do you exit above 66? I don't think you have to. You definitely don't have to. But outside down 67, and then kind of disappointing follow through. And what ends up happening is you get a spike and then a channel and then probably a trading range, but you get good follow through 72, 73. And if you think about it, most of the selling on the daily chart had already happened overnight. And so it was kind of surprising that we got this much follow through for the bears, right? With this, we became a little bit oversold, or, I thought the price was relatively correct with this big gap. And now we're getting a huge sell-off, and this sell-off was unexpected. And so with that, it's possible we start to get a buy the close rally. And you can see you get bull bar 72, follow through 73. And what are bulls hoping? Well, they're hoping it's a trading range day. They've had some good bull closes early in the day. It's been a while, but they think that we should at least let the trap bears who bought below 62 out at break even, and maybe even below 54. And, the next target would be the open of the day, which we didn't quite get to, but that's what we were racing for. And then you get a surprise 75, and bulls are buying close 75, 76, 77, etc., and all the way into the end of the day. For stop orders, I thought 10 was okay. You could buy the close 11, maybe 12. It's okay to be long in this, but this is really difficult. Bulls exit below 29, and I think bears can take the sell. You end up getting follow through, 2 legs down. Bears probably get out 33. They can sell again 35 and might get stopped out. Sell again 40 because for a breakout and swing down. Probably exit above 45. Sell again 49, and no real reason to get out until 60. And then you can sell again 63. Get out above 72. Buy the close 73. So another reasonably good day for always in. Where do we go from here? Well, I think probably sideways tomorrow. We tested a lot of the important magnets. We got back down below this high one. I think probably if we get above yesterday's high, there will be sellers. And if we get any sort of gap down tomorrow, there'll probably be buyers because of how strong that rally was into the end of the day. But like I've been saying on the monthly chart, I think that this is probably going to be a disappointing bar for the bulls, and it's looking like it might be. So my question really is, are we going to get back to the open of the month? We have a lot of time to do it, but it's going to be a bit of a challenge for the bears considering how strong this bull move has been. But you can see we got outside down, so but probably buyers below. We'll probably end up testing back up here at some point. But yeah, that's the day.